Welcome back to the channel, everyone. My name is Sam from Crypto News Flash. For those of you who are new here, I hope by the end of this video, you'll consider subscribing. Over the past couple of days, things have been pretty chaotic in the crypto space. In yesterday's video, I mentioned that I plan to provide more market updates as we experience increased price action across the board. And it's not just about crypto, it's also about stocks. Lately, we've been paying close attention to stocks because of major updates coming from the current administration, which are impacting markets globally. As for crypto today, we're actually seeing a pretty solid day. The overall market cap is up approximately 3.27%. Bitcoin is up around 3.5%, and XRP has gained about 7.5% in the past 24 hours. This trend is evident across the board. However, I always remind you to focus on the bigger picture. These are not positive net gains, but rather bounces from the recent lows. As you can see, I do believe we'll see stronger price action, but we must navigate through this storm first. As I mentioned on X, we're simply weathering the storm, and regardless of what happens next, it's crucial to focus on the market structure. Many people said yesterday's video was bearish, but in reality, I'm just being honest. I won't sit here and tell you everything is fine while the market faces turbulence. We need to be realistic. I also posted something on X that I firmly stand by. I will never be negative about the future of this space. We are in an asset class valued at less than $3 trillion with a total addressable market in the quadrillions. The world is shifting to digital. Automation is becoming the norm, and AI needs blockchain and distributed ledger technology, DLT. Many industries will rely on this technology, and despite the market's current state, I remain bullish because adoption and utility are still in their infancy. Right now, the prices across the market don't necessarily matter. I've always emphasized this. Whether it's XRP or any other project, their valuations are largely dictated by Bitcoin. With Bitcoin's dominance exceeding 61%, the entire crypto market moves in sync with it. Does it make sense that Bitcoin's performance determines XRP's value? No, but that's the reality of the current market cycle. This is why I continue to focus on the long-term vision for crypto. I see institutions diving into crypto, I witness real-time developments in the space, and it genuinely feels like we are on the verge of a monumental shift where the true value of blockchain technology is being recognized. We just need to get through regulatory hurdles, new bills being drafted, and broader economic factors like tariffs. Speaking of tariffs, we saw an announcement from Trump regarding an additional 25% tariff on steel and aluminum imports from Canada, which takes effect today. This brings the total tariffs on these goods up to 50%. Announcements like these trigger market panic and sell-offs. However, if we push through this, the aftermath could be extremely bullish. I've said it before. If we survived COVID, FTX, and Luna, we can endure anything. Every time the market faced a crisis, it eventually rebounded. Looking at the structure now, things are actually shaping up well. That said, we shouldn't get ahead of ourselves. We need to reclaim previous highs before turning extremely bullish. XRP is currently up 6.6% over the past 24 hours, though it remains down over the past week and month. On the yearly chart, it's up over 200%. Analyzing XRP's chart, we see higher highs and higher lows forming. Switching to the daily chart, our key focus should be maintaining significant support levels. We recently lost the $0.27 zone, which was concerning, but we found support around $0.21. Holding this level is crucial. If we see a lower low, it will likely be dictated by Bitcoin's movement. Bitcoin has been climbing since its recent low, which occurred either today or yesterday, depending on your time zone. The price briefly dipped to approximately 76.6K, but is still holding a macro trend line that extends back to early 2024. The question is whether this trend line will continue to hold amid economic concerns, tariff announcements, and fears of a government shutdown. Historically, things often get worse before they improve. I remember when Luna collapsed, many thought that was the market bottom. Then FTX happened and sentiment worsened. Currently, fear is dominating the market. The Crypto Fear and Greed Index has been in extreme fear territory for nearly 2 weeks. Some traders are still expecting lower prices, while others are betting on a rebound. The issue is that if you keep waiting for lower and lower prices, you risk missing out when the market turns bullish. Regarding Bitcoin, I want to avoid a scenario where we wick back down to previous highs and take out liquidity. If that happens, we may see peak fear, followed by a sharp rebound. Ideally, we maintain structure, consolidate, and begin forming an uptrend. Our key targets are 87.4K, 95K, and ultimately 100K. Once Bitcoin surpasses 100K, we can confidently shift to a bullish outlook. Looking at historical price action during election seasons, we often see major market moves. For example, in the lead up to Trump's win, crypto and stocks experienced a surge. Despite initial bearish sentiment in August and September, a bullish structure emerged by October, and the market took off. This is the type of confirmation we need before turning fully bullish again. Switching to stocks, the S&P 500 is now at a critical support level dating back to April 2024. It's either going to bounce or break down. The Dow Jones may have more downside before testing its trend line, but as long as we see impulsive moves higher, it remains constructive. The same applies to the Nasdaq. It's at a make-or-break level. If these markets break down, crypto could see further downside as well. However, if they hold in reverse, we could be looking at a significant rally across risk assets. A recent post from the Cobby letter outlined the possibility of a massive short squeeze. Since February 19th, the S&P 500 has erased $5 trillion, marking the most one-sided decline since the 2022 bear market. Option put volumes have surged to record highs, with over 30 million contracts traded in the past 5 days. Historically, when short positioning reaches extreme levels, it often leads to violent upside reversals. Hedge fund positioning in the S&P 500 has recently turned net positive for the first time since the post-election rally in November 2024. This suggests that institutional investors may be positioning for a reversal. Additionally, despite recent sell-offs, the overall market reaction has been relatively calm, hinting at potential stabilization. On top of that, market sentiment has deteriorated to extreme fear levels, similar to March 2020. Historically, markets struggle to sustain extreme greed or extreme fear for extended periods. President Trump's recent show of confidence in Tesla, where he announced he was buying a new one as a sign of support for Elon Musk, is also noteworthy. This could be a small but important sentiment shift. With tariffs rising and recession risks looming, the markets remain uncertain. However, if we manage to weather this storm, the upside potential could be tremendous. I'll keep you updated on market movements. Stay tuned.